G'day guys, how are you? I'm just going to do a little bit of a technical analysis walkthrough, just on a couple particular assets and commodities. So we're going to look at the US dollar, the S&P 500, and gold, XAU. So going to have a look at how they're tracking and what sort of patterns we can see unfolding at the moment, and how I'm getting a bit of a read on maybe the future movements of their prices, and the evidence in the way I can see that. So let's look at the US dollar. So we've seen there's been a particular reversal in the price action since we reached those peaks up in September, October. Now, I can see a bearish trend and a bearish pattern unfolding here, and I'm looking at more of a head and shoulders pattern. So what we can see is we peaked up here, and this is the head. Although it did sort of consolidate a little bit up there, we did peak, and it has since come off, and it's rallied back up on its secondary rise there, and it's formed the shoulders. Now the downward shoulders there indicates that it is a bearish trend, and it's starting to now continue the slide back down south. So if we look a little bit closer, we can see here maybe a little bit of resistance short term in around this level. It did close lower than the this 101 level, but maybe now rising a little bit further up. But look, over the long term, I think we'll start to see a consolidation, but look for it to be well within this range. For sure, I can't see it breaking back out sort of up towards these highs again. So yeah, look, I think we could see maybe a flag starting to form, and then a level maybe up here at, if we do get it, maybe 105. Maybe looked into a short position. So yeah, that's the US dollar. The S&P, very clean, healthy looking trends. See here the downward trend there was extremely strong throughout that period. We could see it hold up really well within these nice healthy ranges, forming really good support and resistance to the up and the bottom and top sides. We got down to here, this momentum indicator really worked. We did see the lower low pull up well within the trend range, and the momentum of that downward slide seemingly halted. And now since then we've seen a reversal, and it's been trending up since September last year. Now, one of the really key aspects of this trend, which is really important, or a really important aspect, is if it's true resistance, support. Once that, in this case, this trend resistance up here, if it's true resistance, the resistance then becomes support after the breakout, which is exactly what it's done here. It's come back and tested these lows, and it's held up nicely. So what we can expect now is, I think this pattern will continue higher. I think this will look to continue up to 4,300, somewhere like that, and then we might get a bit of consolidation in this shorter period, and then depending on the macro events of the world, then we could perhaps see another bear market, and the equities could come back off again. Now, an important factor is with technical analysis, you cannot look at it in isolation. I'm not looking at this as gospel. I take a more of mainly a macro approach to my investing and trading, and technical analysis is probably less than half of how I base my trading decisions on. It's more so a point on where to exit and enter positions, and getting a gauge for where an asset's price is positioned relative to its overall performance over a given time. It's merely just it's an indicator of how it's tracking, and it's just another telescope. It's just another microscope to look through. Now, gold. Gold's been a tricky one, trading in pretty wild ranges over the last 2 years now, it's got to be said. During this period of heightened global uncertainty, we did see the gold price rocket higher to reach all-time highs there, above $2,000 an ounce. Since then, we've come back off down towards the medium-term levels of 1,600. It really is. I've looked at gold, and it's hard to really draw an analysis upon it. It's tricky to sort of work out what the broad theme is here over the last sort of 3 years. It's really just consolidated and traded quite choppily. What we can see is there's perhaps pretty strong resistance up here, just above the $2,000 an ounce mark. So look, at the moment, it looks like we may be headed for the third approach, and it's going to be interesting to see if it's going to hold up, or maybe break out through that level and accelerate higher. During the trading ranges, interesting to note here that there's a lower low was made at the end of last year, but a pretty fierce rally took place following, and we're back up to that resistance level that may be approaching at the moment. So yeah, my call for gold is a little bit uncertain, but for me, I think the odds are probably in gold's favor at the moment, just due to the heightened economic uncertainty we're seeing around the world and in the global markets. If we do get a risk off event, and a dramatic economic downturn, gold is already positioned very strongly at the moment, and I think what we could see is it'll go on another rally and consolidate at higher levels up in the 2,000 handle. So not a lot to draw upon from gold at the moment, but if we're looking on more of a short-term view, the price is definitely trending higher and on a pretty steep trajectory as well. You can draw comparisons through this trend. Pretty symmetrical, and it does sort of hold up quite healthily. So we will see, but let's aim. We're going to be keeping an eye on what it does at this. We'll say 206, 2060 level. Either an opportunity to enter shorts here, or see where it closes around those days, and if we can get a close above that, get a candle above that level, then maybe an entry position for a long and hold for a longer term period. So guys, that's all for the moment. That's my my take on it all, just on the sort of the three main asset classes and commodities, equities, and currency. Didn't look at fixed income and rates, as it is, it's derived from a few more, other few features than just pure patterned trading. So it's a little bit harder to draw analysis on that asset class. But yeah, there's three main ones. That's sort of my take on it at the moment. So yeah, we'll wait and see what happens over the next few months and weeks and see what develops. Okay, thank you guys, and we'll be in touch again